Welcome back to the course How to Start a Business. In this part of the course, we will discuss managing cash flow. If you want to learn how to start a business, get my book, How to Start a Business, a course in a book by Online Pro. Check out the link below. Before we get started, I want to remind you that this video is for entertainment and educational purposes only and is not financial advice. As the lifeblood that keeps operations running smoothly, managing cash flow is an essential part of operating a firm. Businesses can easily get into financial problems and even fail without good management. Entrepreneurs must set up a system for monitoring incoming and outgoing funds as well as a procedure for handling consumer payments in order to succeed. Establishing a system for keeping track of all financial transactions is one of the first steps in controlling cash flow. To do this, a system for tracking receipts, payments, and expenses must be established. This system needs to be user-friendly, precise, and current. The cash flow cycle, which includes the input of cash from consumers and the outflow of cash for expenses, must also be clearly understood. Entrepreneurs can spot potential concerns and take action to address them before they turn into bigger problems by knowing the cash flow cycle. Setting up payment conditions with consumers is a crucial component of managing cash flow. Entrepreneurs should establish specific payment conditions and let customers know about them. This includes establishing payment schedules, specifying late payment charges, and specifying any additional consequences for non-payment. Entrepreneurs can ensure that they receive payments on time and prepare for future expenses by establishing explicit payment conditions. The management of cash flow also includes getting payments from clients. Entrepreneurs need a system in place for monitoring client payments and taking action on any outstanding invoices. This entails reminding customers about impending payments, following up on overdue payments, and pursuing debt collection. Entrepreneurs may maintain a healthy cash flow and keep their firm operating smoothly by getting paid on time. For any firm, setting up an accounting system is also crucial. The financial components of a company, including how to track revenue, expenses, and payments, should be thoroughly understood by entrepreneurs. Entrepreneurs may make sure they always have a clear picture of their financial condition by setting up an accurate and current accounting system. Understanding cash flow. Monitoring, evaluating, and regulating the amount of money coming into and leaving a business is known as cash flow management. Understanding cash flow is crucial since it has an impact on a company's capacity to make investments, pay bills, and handle other costs. The cash flow statement is one of the most important parts of cash flow. The cash inflows and outflows for a business during a given time period, such as a month or year, are shown in this statement, a financial report. Operating, investment, and financing activities are the three categories that make up the cash flow statement. The money that is made through a business's ongoing operations is referred to as operating activities. This includes money received from sales, payments from clients, and sums used to cover costs like rent, employee salaries, and inventory. Cash spent on long-term investments, like the acquisition of machinery or real estate, is included in investing activities. Cash received from the sale of investments is also included in this. The cash generated or spent on financing the firm, such as the issuance of stock or the payment of dividends, is included in financing activities. A company with positive cash flow is one that is making more money than it is spending, while one with negative cash flow is one that is doing the opposite. A company needs a positive cash flow because it enables it to pay its obligations, invest in new prospects, and even distribute profits to shareholders. The process of anticipating a company's future cash inflows and outflows is known as cash flow forecasting. This is accomplished by developing a cash flow budget, which is a thorough schedule of anticipated cash inflows and outflows for a given time frame. Because it enables businesses to budget for future spending and make crucial financial decisions, cash flow forecasting is crucial. Effective cash flow management is essential to a company's success. To increase cash flow, a number of tactics can be used, including factoring invoices, negotiating extended payment terms with suppliers, and providing discounts for on-time payments. Working capital management is one of the most popular techniques to increase cash flow. The management of a company's current assets and obligations is done in this manner. Inventory, accounts receivable, and accounts payable management are all included in this. A company can increase its cash flow by shortening the time it takes to receive payments from clients or pay suppliers' invoices. Managing debt is another efficient strategy to control cash flow. This entails controlling both the total amount and the terms of a company's debt. A company can increase its cash flow by decreasing its debt load or renegotiating the terms of its existing loan. Forecasting cash flow. A crucial component of managing cash flow is forecasting future cash flows. It entails forecasting upcoming cash flow requirements and making sure the company can access sufficient capital as needed. This can be done by developing a budget that lists anticipated costs and income for a specific time frame. Budgeting enables the organization to foresee future surpluses and deficits in cash flow and take the necessary action to rectify them. Cash flow can be predicted using a variety of techniques, such as financial ratios, historical data, and the usage of financial statements. The financial situation of the company at a certain point in time can be seen in financial statements like the balance sheet and income statement. Past financial statements and cash flow records are examples of historical data that may be utilized to spot trends and patterns that can be used to predict future cash flow requirements. Financial ratios like the quick ratio and current ratio can also be used to forecast future cash flow requirements and evaluate the company's liquidity. Monitoring cash flow on a regular basis is a crucial part of projecting cash flow. This makes it easier to make sure that the company is continuing on its intended course and that any possible cash flow concerns are quickly discovered and resolved. Analyzing financial documents, comparing actual cash flow to anticipated cash flow, and keeping track of important financial indicators like accounts receivable and accounts payable are all ways to monitor cash flow. The sources and uses of money within the company must also be understood clearly in order to manage cash flow effectively. You can achieve this by identifying the primary cash sources, such as sales income and financing, as well as the primary cash uses, such as operational costs and capital expenditures. The company may manage cash flow and make sure that there are enough money on hand when needed by being aware of these sources and uses of cash. Businesses can take measures to improve cash flow in addition to anticipating and monitoring it. This may entail taking steps to boost sales, enhance collections, cut costs, and obtain additional finance. Forecasting and controlling cash flow risks are two additional crucial components of cash flow management. This entails locating and evaluating potential threats to cash flow, such as shifting market circumstances or shifting currency exchange rates. Businesses can reduce the impact of cash flow risks on cash flow and guarantee that there are enough resources available to meet financial obligations by recognizing and managing cash flow risks. Tips for managing cash flow. An essential component of managing cash flow successfully entails the efficient management of cash inflows and outflows to guarantee that a company has access to enough funds when required. Planning ahead is one of the most crucial pieces of advice for controlling cash flow. Businesses should predict their cash flow requirements and make appropriate plans. This can assist in spotting future cash flow issues so that remedial action can be taken before they worsen. Maintaining frequent records of your income and expenses is another crucial piece of advice. This will make it easier for firms to pinpoint areas where cash flow could be enhanced. For instance, a company may need to assess its expenses and look for methods to cut costs if it is spending more than it is making. Contracts might be renegotiated, better methods of doing things might be discovered, or unnecessary costs might be reduced. Additionally, companies ought to seek for strategies to improve their cash flow. This can entail increasing sales, branching out into new markets, or attracting new clients. It could also entail looking for funds from lenders or investors. To find the finest solutions for the company, it's crucial to weigh all of your options and consult with experts like accountants or financial consultants. Controlling the timing of cash flows is another part of managing cash flows. Businesses can enhance their cash flow by, for instance, thinking about extending the terms of payment for their suppliers or delaying the due dates for their customer invoices. Finally, companies should be ready for unforeseen circumstances that could affect cash flow. This might involve market turbulence, natural catastrophes, or economic downturns. Businesses can be better prepared to deal with unforeseen occurrences and lessen their impact on cash flow by having a contingency plan in place. In conclusion, controlling cash flow is challenging yet crucial to every company's success. Planning ahead, keeping track of spending and income, looking for cost-cutting opportunities, boosting cash flow, and being ready for unforeseen events are all ways that businesses can make sure they have access to enough money when they need it and manage their finances more effectively. Remember, every expert was once a beginner. If you want to learn how to start a business, get my book, How to Start a Business, a course in a book by Online Pro. Check out the link below. Thanks for joining us. Smash that like button, subscribe for more awesome content, and hit the notification bell for more empowering content.